also have a look at hog markets this week with Iowa State Extension livestock economist Schulz. The USDA's latest inventory report shows the highest number of hogs and pigs in the U.S. on record. Estimates on December 1st put the tally at 68.3 million head. The country's farmers produced 10% more pork in November than the previous year, and supplies in the freezer are still high. December's cold storage report revealed a record amount of pork for the month, with data first recorded in 1915. We talked with Lee Tuesday morning and began by asking for his impressions on the latest quarterly hogs and pigs report.
Well, I don't think there was too many surprises given what pre-report expectations were. We really were looking at a large inventory, record large inventory in many cases going back to 1988 since we started the quarterly estimates. If we've seen some surprises, I think they really came about when we looked at the number of sows farrowing and the farrowing intentions. We're quite a bit lower than pre-report expectations. Now, when we really made up for the number of sows farrowing in the September-November period, given the productivity, looking at that pig save per litter category. So really the pig crop, while it was down 1.2%, we made up for quite a bit in productivity. And so, overall, I think suggests that we are going to have larger supplies in 2016, but not any real major market movers at this point.
Of course, one of the things that's limited supply dating back a while now is PEDV. What's been its impact so far this winter?
We've really seen a very minimal impact. There has been a few isolated incidents. I think if we look at the impact of PEDV, I think it could look maybe like the 2014-2015 period, where maybe a little bit of ramp up in incidents as we go in the winter and spring period, but nothing like we've seen in 2013 and 2014. So really, I think there's really going to be very little, if any, impacts on pork production and inventory numbers due to PEDV.
Let's talk about demand. First, domestically, what's the environment right now in this country for pork?
Well, if you look at pork demand in general, it has been very stable and very strong, really dating back the last several years. I think the last 12 quarters, year over year, we've seen positive demand, and that's really not too surprising given what pork demand has been historically. I think when it's important to really look at the global demand picture for pork, a lot of the discussion this last year has been due to the strength of the U.S. dollar. If you compare it to Canada, up 19% inflation compared to year ago levels, and that really has hurt our pork demand. We're still only down about 0.5% from a volume standpoint, but we've actually made up quite a bit of that the last couple of months.
What are we seeing right now for market prices, Lee?
Well, if we look at market prices, I think first it's important to kind of maybe compare to 2015, since we know pork production is likely going to be a bit larger in 2016. If you look at futures market prices, February, May, June, July, August, October, all trading lower than year-ago levels currently. If you're looking at market prices higher, we're staring at that April, December, and then February 2017 contract are currently trading higher. If you look at prices in the first quarter, right in that range of, I think, 58 to 63. Second quarter, maybe 71 to 77. Third quarter, 69 to 74. And then similar for the fourth quarter to the first quarter, about 58 to 63.
What are we going to see for break-evens here to close out 2015 and entering 2016?
Right now, I'm looking at break-even cost of production right in that $62 range. Right now, if you look on an annual basis for 2016, I think lean hog futures are in that $64 to $65 range. But also realizing there's going to be quite a bit of seasonality in there, where profits in the summer months you're looking at $14 to $20 in the summer months, and really currently in this first quarter $8 losses per head or so, and then in the fourth quarter maybe about $4 losses projected.
That tightness there, is that strictly based on market prices, meaning have producers been able to control costs with cheaper feeds?
Well, I think when you look at cost of production, it's not only, what prices are now, but looking out into the future, either this marketing year or the further marketing years into the future. We're right in that cost of production of corn in that $3.50 to $4 range. Soybean meal prices are in that $2.50 to $300 range, and really distillers grains in that $120 to $150 range. And that's quite a bit of consistency in that price. And I think that's really locking in that consistent cost of production there. And where we're really seeing the variability and what's causing fluctuation in profits is those changes in the lean hog price.